Today I'm going to show you how to use interactive brokers effectively, based on my own experience as a European investor over the past 8 years. You'll find out what you need to do to ensure you pay the lowest possible fee when buying and selling stocks or ETFs, so that you have more money left over to invest instead, which could add up over the long run. In fact, you may be surprised to hear that there could be a cost difference depending on whether you use the web interface or one of the interactive brokers apps, something very few people are aware of. Not only that, is activating the stock yield enhancement program actually worth it? How do you transfer shares from or to interactive brokers? I transferred ETF shares myself to IB in the past. And what is the cheapest way to convert different currencies? Seeing as IB gives you access to pretty much any exchange you can think of, enabling you to not only hold but trade in different currencies as well if you so wish. So yes, since I want you to get as much as possible out of using the broker, we have a lot to talk about today. But first, here's why Interactive Brokers is my personal #1 broker and the most often recommended broker on European finance and investing subreddits. It's my largest brokerage account for a reason. If I had to pick a single brokerage account for all of my investments long term, this would be it. Interactive Brokers has a long history going back all the way to 1978, is highly profitable with $3.7 billion in profit last year alone, and puts a major emphasis on security with $16.6 billion in equity capital, more than 3 times its regulatory requirement. EU clients are regulated by the Central Bank of Ireland, while if you're based in the UK, you're regulated by the FCA, in the US by the SEC, and so on if you're based in another country. And since Interactive Brokers is a publicly listed company in the US, with a market cap of $87 billion, it has even more stringent regulatory oversight and transparency requirements compared to most other brokers. To top it off, there are no account fees, and it gives us access to 160 markets across the world where we're able to directly trade in 28 different currencies. All of this while charging some of the lowest fees, starting from as little as 35 cents USD for US stocks and 1.25 euros for European ETF orders up to 2,500 euros, which is how I use IB most of the time. And you can of course move your shares away from or to the broker for free anytime, so you're never locked in. I'll show you exactly how that works later on in the video. In my opinion, no other broker in Europe comes close, especially when you consider how much you can do on interactive brokers while only paying a minimum in fees. Before we take a look at how you can minimize those in more detail, Interactive Brokers offers a few different account types, and we should quickly cover the most relevant ones. When signing up to Interactive Brokers, for example using my link in the description if you'd like to support me, you get to this page where you have to enter your email, a username and password as well as your country, and click on Create Account. Something worth mentioning is that IB will automatically open the account in its locally regulated entity based on where you live. If you're in the EU, that's Interactive Brokers Ireland. In the UK, Interactive Brokers UK Limited. In the US, Interactive Brokers LLC, and so on. And since the broker operates globally, if you ever decide to move to another country in the future, that's not an issue here. Just make sure you give IB your new address in that scenario. Let's get to the second step of the sign-up process, selecting your account type. Most of you will likely want to open an individual account, but Interactive Brokers also offers joint accounts as well as business accounts. If you're thinking about opening a joint account with your partner, make sure you figure out if this makes sense from a tax perspective. For example, in Austria, my wife and I are taxed individually with no tax benefits for married couples. So a joint account would just make everything more complicated. As a result, we're using individual accounts instead. Moving on, click on Start Application, after which you need to fill out all of your personal information, identify yourself, for example using your passport, and so on. I think the rest is pretty self-explanatory. The nice thing is you can always add additional accounts later on within the Interactive Brokers web interface. Something that could be useful if you'd like to separate different investments for whatever reason, or if you'd simply like to invest some money to then gift to your kids once they're older. Okay, let's finally get to investing. To find the right ETF on Interactive Brokers, I recommend looking for your ETF on justetf.com first. Now you can find it on IB either via its ISIN number or its stock exchange at the bottom of the page. I actually recommend picking the exchange ticker as it makes it easier to pick the one traded in your home currency. In my case, that's FWRA, which I'm going to then copy into IB search bar. Often this already narrows it down to a single option, making your life a lot easier. But if it doesn't, as is the case with the Invesco FTSE Oil ETF, make sure you select the exchange where it's traded in your home currency to avoid having to convert your money and having to pay conversion fees each time. And since this question comes up from time to time, the currency you buy an ETF in has zero influence over your returns in your home currency, for example the euro, as your ETF holdings will be worth the exact same. Anyway, since my home currency is the euro, for the Invesco FTSE Old I'm choosing BVME, which stands for Borsa Italiana. Now you can either buy it directly or set up an automated recurring investment for it. In my case, I have one set up for the start of each month. But wait, before you start investing into anything on Interactive Brokers, here's what you need to know to buy ETFs and stocks while keeping fees to a minimum. The vast majority of ETF investors, which includes me, should switch to the tiered pricing plan to pay as little in fees as possible. It can take up to 48 hours for this change to take effect. You then only pay 0.05% with a minimum of 1.25 euros instead of a minimum of 3 euros with fixed pricing. I created a calculation sheet you can use, which I'll link down below to compare pricing models. But wait, this assumes the ETF uses IBIS aka etc. as its home exchange, which is the case for the accumulating Vanguard FTSE Old aka VWCE for example. But if you see BVME, so Borsa Italiana, as is the case with the Invesco FTSE Old, or AEB, the Euronext Amsterdam with the iShares Core MSCI World for example, you may end up paying significantly more for your direct orders, meaning a minimum of 2.60 euros instead of the 1.25 euro minimum in fees you would otherwise be paying for orders up to 2,500 euros. And if you're investing smaller amounts on a regular basis, paying double the fees can make a significant difference in the long run. Luckily, there are two ways around this that very few people seem to be aware of. Option 1. Create a recurring investment instead, which can automatically purchase the shares for you as soon as the next day if you so wish. You can set it up to stop after a single investment, or let it invest on a monthly basis for example, which is my preferred way to buy the Invesco FTSE Old on a regular basis. As you can see here, this ensures you only pay the minimum in fees, no matter if the ETF's home exchange is IBIS, BVME, AEB or something else. And it gets you fractional shares as well, meaning the entire amount is fully invested. You may need to activate the stock's trading permission for that though. As for how these work, recurring investments are filled through volume-weighted average price orders on the purchase day. All customers buying the same ETF via recurring investments on a given day get the same average price on their investment. I really like this approach as we're basically getting the average price on a given trading day instead of all orders being executed at a single point in time. Okay, but what if you don't want to wait until the next day and you want to buy the shares right away while paying as little in fees as possible? Here's where option number 2 comes in. The new Interactive Brokers desktop app, which you can download for Windows or macOS depending on your operating system. What makes this app special is that we're able to specifically select what exchange we want our order to be executed on, instead of IB doing that for us via its smart routing. And since different exchanges have different fees, we're able to select the exchange with the lowest trading costs this way. Here's how this works, once again using the Invesco FTSE Old aka FWRA as an example. When we click on buy order, there's an advanced mode which is missing in other apps and the web interface. After clicking on it, we're now able to select the exchange we want our order to be executed on under destination. Since GetTex has the lowest fees, I'm going to pick that one. And to make sure we see the current price the ETF is being traded at, we'll check the GetTex homepage in a second. Which reminds me, to get the lowest possible spreads and the best price, you should always place your ETF orders during regular market hours, meaning Monday till Friday from 9 to 17:30 Central European Time. Okay, we can see that on GetTex the current buy price is 6.75, so I'm going to enter that as the limit price in the app, together with the amount I want to invest, 1020 euros. Now I submit the buy order, accept the info about cash quantity orders as well as GetTex not offering fractional shares for this ETF, and transmit the order. And that's it. My order was filled already. Under View Trades, we can now see that I only paid the 1.25 euro minimum in fees for this 1019 euro ETF purchase because I was able to manually select GetTex as the exchange. And if we now check execution prices on BVME, aka Borsa Italiana, where our order would have been filled otherwise, we can see that we even ended up paying a lower purchase price on GetTex at 6.75 euros per share at 10:55 am, compared to 6.751 euros on Borsa Italiana at the same time. So I would consider this a win-win, which shows you that the Interactive Brokers desktop app might be worth looking at for these scenarios. Now, if you're already holding some investments on Interactive Brokers, you might be wondering if activating the Stock Yield Enhancement program is worth it. This option is turned off by default for European users, so your shares are never lent out unless you manually activate this feature yourself. To be able to activate it, you either need a margin account or you need to hold over $50,000 in assets on the broker. If you then decide to turn the feature on in your account settings, your shares can be lent out against collateral, with IB sharing 50% of the lending profits with you. If you're just holding ETF shares shares like me, I don't think activating this feature is worth it, since you're unlikely to earn more than an extra 0.01% from securities lending, while still introducing a bit of counterparty risk to your long-term investments. Another thing to keep in mind is that you can't select that you only want to lend out a specific stock or ETF. The feature applies to all the shares you hold in your account. And if you hold dividend-paying stocks or distributing ETFs, dividends that are paid out while your shares are lent out may not count as regular dividends tax-wise, which means you might need to pay significantly higher taxes on these in your home country. So make sure you fully understand the potential downsides of this feature before activating it. Let's get to how you can transfer stocks and ETFs to or from Interactive Brokers. Something I've already done myself 1.5 years ago when I moved some ETF shares from DEGIRO, Scalable and Smart Broker to my IB account. To transfer shares from another broker to Interactive Brokers, you need to click on Transfer and Pay, Transfer Positions, Incoming, and if it's within Europe, select all other regions. Then click on Free of Payment Transfer of Global Securities and select the broker you want to transfer your shares in from, as well as your account details from there. Once you're done with that, you need to add the assets you want to transfer in, for example, ETF shares and the amount of shares. After you click on Save and Finish, click on Continue and confirm the transfer request by signing using your full name. You'll then get a PDF from Interactive Brokers, which you need to send to the broker you want to move shares away from, or they might require you to fill out a different form as well. Either way, you're done on IB's side. Interactive Brokers doesn't charge any fees for transferring shares in or out, but some brokers like DEGIRO sadly do, so just be aware of that. You'll be notified by IB once your share transfer has been completed. Here's what that looked like for me in mid-2023 for my transfers from 3 different brokers. Chances are your purchase price won't be transferred by the outgoing broker though. Luckily, IB enables you to edit for those shares right after the transfer has been completed, so that you can see the correct returns for your investment. And you should absolutely do that so that you can calculate the correct amount of taxes you need to pay when selling at a profit. Speaking of that, you can find your tax reports and statements under Performance and Reports in the web interface. As for transferring shares from Interactive Brokers to another broker, the process is very similar. In this case, we just need to click on Outgoing instead, enter the broker's details and select the assets we want to transfer away from IB. Next, since you're able to hold many different currencies and directly trade in them on Interactive Brokers, we need to discuss how you can minimize currency conversion fees. Interactive Brokers' auto FX rate is extremely low at only 0.03%, so if you want to buy stocks in a different currency, for example US stocks traded in USD and you're holding euros, IB will automatically convert the right amount using the current market exchange rate and only charge 0.03%. To put things into perspective, that's a fee of only 30 cents for an automatic 1,000 euro conversion. You can always convert your cash manually as well, which makes sense the larger the amount gets. Here the fee is even lower at 0.2 basis points, meaning 0.002%. But there is a $2 minimum fee you need to keep in mind. Since you're probably wondering, this means that the break-even amount where manual conversions start to be less expensive is at $7,143 or more. Now let's say you receive dividends in USD either from distributing ETFs or dividend-paying stocks. If you're planning to buy something directly in that currency, for example individual US stocks, you can use the money that way. But if you're exclusively investing in euros like me, here's the best approach based on my own experience. Once a quarter, I receive dividends from my older distributing Vanguard FTSE Old ETF shares. Since they're credited to my account in USD instead of being converted automatically, I could now exchange them manually. However, since we're only talking of amounts ranging around $120, paying a $2 minimum in fees for a manual conversion isn't really worth it here in my opinion. So instead, I simply withdraw them directly in USD from IB to my Revolut bank account, where I'm able to convert them to euros for free. You can then wire the money straight back to Interactive Brokers to invest if you want. Alright guys, I hope that this video helps you use Interactive Brokers more effectively going forward and that you were able to take something useful away from it. If that's the case, I'd love to hear about it in the comments. Also, I want to be clear about one thing. This video is not sponsored, as I don't do sponsored content out of principle and never have, something I'm proud of. That being said, if you would like to support me, you can use my link in the description below when opening an Interactive Brokers account, in which case I do receive a small commission. And don't forget to gently tap the like button and to subscribe while you're there if you haven't yet. Now, if you're interested in how stocks and ETFs are taxed across 22 different European countries, ranging from 0% all the way to 41% in capital gains taxes, you need to watch this video right here. As usual, none of what I mentioned today was meant as investment advice. I'm just openly sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.